is Simi Okpayemi. A round of applause for Simi, please. Thank you. So Simi is the company secretary at uVerify, where she oversees and executes the operations and regulatory compliance while driving initiatives that incorporate international best practices on good corporate governance. Simi obtained a Bachelor of Arts in Criminology, pre-law from Indiana University of Pennsylvania, USA, with a summa cum laude. She proceeded to obtain a Juris Doctor in Law from the Northwestern University in Chicago, USA. She's dual qualified to practice law in the state of New York and Nigeria, where she was called to bar in 2015 and in 2017, respectively. She's also a certified mediator with the Center for Effective Dispute Resolution, UK, the Center for Conflict Resolution, and in Chicago, USA. Another round of applause for Simi, please. You can do better than that, guys. Okay, thank you very much. So the next person to join us on stage is Mr. Chukwuemeka Ikwa, Head of Control Team at Sycamore. A round of applause for Mr. Chukwuemeka, please. So, Mr. Chukwuemeka is an accomplished GRC, governance, risk, and control professional with years of experience that span across the banking sector and fintech. His addiction to risk mitigation has positioned him as a specialist in areas of process improvement, data protection, fraud mitigation, and KYC and EDD compliance. Chukwuemeka currently heads the control team at Sycamore Integrated Solutions, a peer-to-peer lending platform built through technological integration that connects borrowers to lenders. He has a degree in civil engineering, wow, from Anambra State University, and an MBA from Unizik Business School. Another round of applause for Mr. Chukwuemeka. Okay, last but not least, I will be inviting onto the stage the representative of Mr. Akim Adeniji Adele, who is duly represented. Please forgive me, I do not have your bio. I have Mr. Akim's bio. Should I proceed and read his bio? Okay, thank you. Okay, so Mr. Edward, who is going to be representing Mr. Akim, is an industrial risk and cybersecurity expert with over 13 years of experience in the financial industry. He holds a BSc in computer science and a master's in cybersecurity, and he currently heads the risk and management compliance team at eTransact PLC. A round of applause for Mr. Edwards, please. And a round of applause for yourselves. Thank you so much for joining us. Thank you once again for joining us, gentlemen and ladies, sadly. So today we are going to be discussing the growing threat of money laundering in the financial sector, of course in Nigeria and across Africa. And thankfully we're dealing with people with loads of experience in this sector. So what we're really looking forward to, of course, is some of the incredible policies that you're aware of, but we also want to learn from your personal experience in your respective roles so that our audience can connect better to that experience, and hopefully it can also help them better their processes in their respective organizations. But first, we're going to be doing introductions and first questions. So I'm going to be starting with Simi on the far left corner. Please introduce yourself.
How do we know if it's on? Is it on? What did you say I should do? I should introduce myself.
Introductions, yes.
As he introduced me, I'm Simi Okpayemi. I actually work with Akim. I'm Chief of Staff at uVerify, so I handle operations. And in most of that, I've gotten to learn more about products that assist this particular topic. So whether it be transaction monitoring, KYC, anti-money laundering. So that's why I think I'm qualified to be on this panel. So that's my introduction.
Okay, thank you, Simi. Just before we pass on the mic, tell us what exactly is money laundering and why do you think it's a threat to financial services?
Okay, so I think everyone here knows to some degree what money laundering entails. May not know as much as other people, but pretty much money laundering at its rudimentary stage is disguising financial assets, whether it be money or crypto, as we know now, disguising illegal financial assets and putting them in a system such that it takes a legal color. And usually it goes through stages. So in the legal and money laundering jurisprudence, it's 3 stages: placement, layering, and integration. And placement is pretty much as it sounds, placing it into the financial system. So whether it's you make a transaction or a deposit into a bank account, so that the process of moving that financial asset commences. And usually, people who launder money are a lot smarter than putting $100,000 into a system where they know that there's a trigger if you spend maybe more than $10,000. So they'll start with maybe like $2,000 today. Put $2,000 today, we say we have a business of some sort. So the bank account of ABC Ventures. So you're placing it in the first place so that it takes some kind of a legal color, even though what is ABC Limited really doing that it has $2,000 to deposit every day for the next 30 days? Now, the next thing is to layer it. So you just keep on making it look even more. So whether it be you catch X, you do something, maybe it's a laundromat, which is where the word laundering came from, and you're running some kind of a business that's maybe it's a cash business, for instance, and you just keep on running it so that the people who would ideally be triggered to ask questions about this transaction will be like, oh, okay, maybe they're running some kind of a legitimate business. But then ultimately, the goal of money laundering is to move it from one illegal source to the next level. So the last stage, integration, is whereby you move it from the person who started the transaction to the ultimate beneficiary, usually let's use a drug lord who is somewhere in Colombia, for instance. But because you say we're moving it through this system, they've been cashing checks, they've been running, it's been placed, it's been integrated. Now, we are now a legit business and it has gone to the ultimate owner. Now, why is this a problem? Because you and I, who are doing legitimate business, we want some kind of financial security that if I eventually hit the lottery, for instance, or I do a big transaction, nobody's going to flag my transaction. But because there are these people who are doing all these transactions, you can't tell the difference between whether or not this is legit or this is an illegal transaction. So that's one. And it's also a very easy way to fund corruption, to fund criminality, to fund all kinds of things. So you weaken the financial system. And when that's weakened, let's take Nigeria for example, nobody's going to take you seriously in the global community. So those are some things to consider when we start talking about money laundering.
Thank you very much, Simi. Okay, so next we have Inyoma, and I mean, it's basically the same pattern. Introduce yourself, but this is your question. What are the main methods used by criminals to launder money? And can Yahoo boys launder money too?
Okay, my name is Inyoma Maduike. Quick introduction. My background is law. I'm a lawyer. And I currently now work within the legal and compliance teams in Cora. Cora is a B2B payment infrastructure company here in Nigeria. I've been opportune because of the experience with Cora to deal with real life, to have a real life interaction with money laundering, transaction monitoring, fraud. And so I think that's the basis on which she said I'm on this panel. Answering the question, what are the various methods? First off, if we want to talk about methods, we will not be able to live here today. There are many methods, and the methods change depending on, and as new methods of, as new systems emerge, criminals find ways around these systems. I don't know if anyone in here watches or has seen Ozark. Ozark, anybody? That movie is a very good movie. There are hyperboles like most movies, but it kind of sheds light into how criminals, the intention of criminals. So there are different ways you do it. There used to be there used to be a very popular eatery where I used to live. It was down the road. It was a very fancy looking eatery. But anytime I walked into that eatery, it was always only me. It was a very fancy eatery. There was another eatery down the road, which was less fancy because it was like street food type of eatery. And that eatery was more popular in terms of people were always walking into that eatery. So you had a situation where this fancy eatery had like one or two people walking in or three people walking in a day. I learned that the popular eatery offered to buy the building belonging to the not so popular eatery, and they refused to sell. The reason for that story is that oftentimes you have a system where people create elaborate schemes, as elaborate as setting up a company, building an institution, setting up shop, just for the purpose of passing money through, right? It can be that elaborate. So that's why I said it's often very, if we wanted to talk about all the schemes, we can sleep here. But in essence, some of the ways you can track some of the key pointers to possible avenues for money laundering is cash-intensive businesses. It's a type of business that typically will be seen as a business that receives a lot of cash. So, for example, jewelry business or furniture business, or those kind of businesses that people will look at and say, oh, this kind of business will typically receive a lot of cash. Those are the kind of businesses that people who want to launder money will typically engage with, right? Because you will expect that those kind of businesses will receive cash. As someone within the payment space, if you have a channel that connects to the financial institutions or the financial infrastructure of the country, then you will expect that people will want to use your channel in whatever way. So you can say, for example, people can decide to set up a POS business, right? Because that is a very good cash-intensive business, right? And because that channel connects you to a legitimate payment infrastructure, it enables someone who might not be interested in POS business, right, to set up a POS business and send money, illegitimately gained wealth through the system. So so those are some of the markers of money laundering techniques. As far as, and the question around whether the Yahoo boys launder money, if we agree that Yahoo boys are engaging in criminal activity, right? I think we can agree. You can imagine that they are also looking for ways to pass the monies that they have gained through criminal activity into systems that legitimize those gains. And we have seen a lot, and trust me, these guys can be very, very innovative. If there is a new channel today, speaking from someone in payments, if there's a new channel today, you can trust that one boy somewhere in one room, right, is looking for a way to use that channel to launder ill-gotten wealth. So that's my answer to the question.
Okay, that was quite comprehensive. Thank you very much. Okay, moving on quickly because of our time. I'll be calling on Chukwemeka next. And my question is very simple. What is the role of KYC and AML in preventing money laundering now that we have established that it is a huge problem?
Yeah. So I'm Chukwemeka. I work with Sycamore. Sycamore is a lending and borrowing company that uses technology to connect both parties together. Initially, I started my career in UBA as control and compliance, and then I moved to Sycamore. So coming to the question, the role of KYC and AML in the space itself, in preventing money laundering. Basically, you cannot know who you are dealing with unless you conduct a KYC on the person. So for you to onboard a customer into your business, there is first thing that you need to do, which is to know who you want to get into business with. And KYC tends to give you a risk assessment of who this person is. So if you do your KYC on Mr. Chukwuemeka, you should be able to decipher that Chukwuemeka works to so-and-so place, that Chukwuemeka earns a legitimate income, that Chukwuemeka is not into anything that is going to impair your own business. So if you do not conduct your KYC, that's when you tend to onboard criminals into your own business. So the vital role that KYC tends to play is that it gives you a holistic risk assessment of who your customers are. Then coming to AML, I like to see AML as the umbrella that guides KYC. I see KYC as a component of AML. So AML on itself sort of states the processes, which includes identity check, your due diligence, your transaction monitoring, that will enable you to actually start from the onboarding stage, see when this customer is already in your business, and on a going forward basis to actually know who this customer is and what they are doing on a growing basis. So it tends to give you a holistic view from the beginning to the end of this customer stay. So KYC and AML plays a vital role in preventing money laundering in financial sector. Thank you.
Thank you very much, Chukwuemeka. I do have a question, right? Because to get all of this information, it means you have to ask a lot of questions. And we know today, in today's tech ecosystem, people do not want to be asked a lot of questions. They just want to use your service and move forward. But I will come back to that much later. Finally, we have Edward on the panel, and my question is very straightforward. What are the potential consequences of failing to comply with KYC and AML regulations?
Okay, thanks for that question. My name is Edward. Like you've introduced, I work for eTransat. eTransat happens to be a super fintech company here in Nigeria that powers most financial institutions. So if you have heard of eTransat, we power the banks. We are a switch, one of the major switches in Nigeria connecting the banks. So if you are doing transaction from Bank A to Bank B, eTransat is sitting there trying to make sure that those transactions flow freely. Now, back to your question, and based on what they've said, you will agree with me that money laundering has no positive consequence, right? Because from what Simi said, you are taking a legit money, right? You're converting that money, you're taking illegit money, right? And you're converting that money to something that looks legit. A typical example is you steal money from the bank, right? Then you buy an estate. And people are paying you for rentage in that estate. And you are sitting down quietly. So at the end of the day, the essence of money laundering is just to disguise what they've done. So that being the case, it means that it has several consequences. And this is why a platform of this category is important for us to enlighten people on what we could do as institutions to prevent money laundering. Now, one of the consequences is that for institutions, like that money are laundered through their platform, it could cause what I call reputational damage, right? Secondly, it could attract sanction. Now, if you look at most institutions within the financial ecosystem, they are being regulated by banks, central banks, not just in Nigeria, but globally. So the moment you allow your platform to be used as a laundering platform, it could be sanctioned. But more importantly, as I drop the microphone, is the loss of customers is another negative consequence of money laundering. Now, think of you losing your customers. And this is the mistake that most people have made because they promote profits as against trust, right? But it is that trust that actually brings that profit. So most people are busy canvassing, okay, pushing for profits and ignoring the trust component. So you having a solid AMA program and KYC system will help to strengthen the trust of your customers. And once you have that trust, you can be rest assured that profit will go high. So as take home for us today, I think we need to go back home from whichever institutions we come from and begin to encourage ourselves to comply to KYC program, because at the end of the day, it will definitely strengthen the trust of your customers. Thank you.
Thank you very much, but I think I enjoy you so much, I don't want to let go of you yet. Which is why my next question is going to be
from some of the things you said. So if I hear you correctly, it is very possible for money launderers to launder money through your system without your awareness. So in which case, what do you think are the mistakes that businesses make that allow for this loophole, and how can they correct it?
Okay, thanks. So what the malicious actors do, right, is to look for loopholes. But in addressing those loopholes, it's important we understand what I call the source points. Now, there's what is called the process components, right? If you have an inadequate process, it means you're opening your system up for malicious actors. If you have people who are not competent, talking about the people components, you are also opening up your system for malicious actors. And again, the last one is technology. Now, from history, we've seen that as technology advances, right, that advancement in technology comes with default potential for loopholes. And this is from historical data. So it means that if you want to address money laundering, you must pay attention to process, to people, and to technology. And one of the things I recommend is that you need to, first of all, define what I call the anti-money laundering governance structure or framework. Because at the end of the day, you must structure a framework that should govern your program. Now, the second thing you should do is not enough to have framework or policies, which is where people make mistakes. They come up with policies, framework, don't do this, do this. But the adherence to that framework is very, very important. And that is where the management of the company, the board of directors, need to come together and ensure that those frameworks are understood. And that is where training comes in. So there can't be an effective anti-money laundering program without an effective training, without the participation of the top management. So most people have just come up with policies, and they throw out the policies. These are framework for dealing with money laundering, and that framework is not properly understood. So I think we need to go back home and begin to create more awareness like we are doing right now. That will really help to boost, the security and the trust level of institutions. And finally, like he said, we need to also ensure that we do what I call proper risk assessment. Now, the mistake that people make is this: during onboarding process, so I'm trying to bring it to my platform, right? I do a KYC assessment, I do all the due diligence. At the end of the day, I go back home to go and rest. But don't forget that these guys are also smart and things are changing. So when you're conducting risk assessment, apart from doing it at onboarding level, you must ensure that that process is an ongoing process. This is the way you can effectively detect and ensure you close any potential loophole. Thank you.
Thank you so much. Okay, so my next question is for Simi, and it's quite straightforward. So how can financial institutions use technology to improve their KYC and AML processes?
Okay, so just to build off what Edward, Rebecca, and gentleman beside me have said, because you guys have said a lot. But one thing that I'll say as a guiding principle before you even get into understanding technology is you always have to ask questions like a criminal. Here's why. If you are trying to outsmart somebody, you always have to be 1 or 2 steps ahead of them. So you say, okay, this business looks legit or looks illegal. Why? Why would anybody put in this much effort to do X, Y, Z? And that's why when you're building your whatever it is, the technology system that you want to use to monitor transactions, you want to monitor whatever it is, you have to also put on your, for want of a better phrase, your criminal hat. And sometimes, unpopular opinion, you might have to consult with criminals. You look at all these, like he mentioned Ozark. Trust me, the American government has people who were once former criminals now sitting with them when they're making their AML policies. Why? Because they have to think from the perspective of, it's not just an A to B transaction, it's A to B to Z, and maybe AAA. So you have to think ahead. And that's why when you're doing you can't just say, okay, I'm doing KYC, for instance. These are the requirements. Submit your name, submit your date of birth, submit your this. Ask questions. Don't be afraid to ask questions that embed things that you're like, wow, this is very, very, very in-depth. So you ask, okay, this particular person, now the popular one is politically exposed people or sanctions lists, which are fantastic. But you have to use a lot more than just gathering information. So you say, I have this information on this person's political exposure. I also have information that this person was sanctioned in this country. But do I have a travel history for this person? And you ask, okay, why would a random Nigerian decide to go to Iran, for instance, in the thick of the war? Well, Nigerians here, we know we don't like suffering. So why am I going to Iran? Why is this person choosing to go to Syria when the people who are citizens of Syria are trying to flee from their country? Little details like that. It doesn't take, you don't have to immediately use it, but you're keeping records of it. And so ultimately, when you put in your fancy systems like your machine learning or your data analytics, everything starts to build a bigger picture. So that's where technology comes to aid you. You're gathering information, quite all right, but you're gathering information from the outset because you know ultimately there's a picture that you're trying to build. And this is how, not that I'm a criminal, but I have a degree in criminology. This is how criminals operate. They don't just say, okay, fine, I want to steal from a bank. I'm just going to pick up a gun, wear a mask, and go there. They're first of all going to monitor and say, okay, there are 6 security points. That camera, I know, sometimes works on a Tuesday. And this one works on a particular day. And there are people manning this particular place. So how am I going to create this intricate system? And that's the beauty of technology. It helps you, whatever you feed into it, it will ultimately feed out. So it's for you to do your own due diligence as a service provider to put all this information and constantly think ahead that what additional information might be I'm not looking at or the person is not looking at because we've told ourselves that we need A, B, C. How about the things that are in the further aspect of this particular intricate system?
Thank you so much, Simi. So just to do a quick recap, right? Have a framework, ask the right questions, train your people, refine your process, and then use technology to smoothen the entire process. So moving on to Chukwuemeka, what do you think the bottlenecks to implementing the process of properly performing KYC and AML regulations are?
Okay. The bottlenecks, are the challenges to implement most of these KYC and AML rules. I know in our office, most of us have heard the acronym, you are killing business. If you are into risk, credit, compliance, I'm sure you must have heard something like you are killing business. So in as much as we are in the business to make revenue, when you try to implement most of your KYC rules and AML rules, you tend to get a kickback that you're killing business. So this is a great challenge in the industry itself. Now, how do you tackle this? First, it has to be a top-bottom relationship. So the management itself has to imbibe the KYC and AML into their own system so that the sales head himself will also bring it from his own side to his own guys. Because most of the challenges you tend to face when you want to implement KYC is from even your own team members. So if they do not buy the idea that all these things is important, it tends to have an issue in the company itself. So the number one issue that you have, the challenge, the bottleneck you have in implementing it is the issue of it will limit the income you're going to get. So you have to find a way to balance what you are generating and the KYC itself. Number two bottleneck there is also the issue of the onboarding process tends to get longer. So when you try to implement KYC AML, that means you are collecting a lot of data from your customers. And this tends to be a lot of processes. So the challenge the company needs to tend to curtail here is to find a way to reduce the possible collection of data they're doing so that the customer can easily avail this data to us. And another challenge that can also come out from all this is the issue of collecting a lot of data. We are in the era of data protection. So for you to actually ask me what's your source of income, what's your the income you get, what's the width band, is it within 1 million, is it 5 million? there has to be a reason for this. So customers themselves tend to be reluctant to divulge most of this data. So you have to back up your requests with a full disclosure of what you need that information for. So if I'm asking you what's your source of income, it is for me to analyze whether the source of income that you are getting equals the amount in your account. If your source of income is your analyst that earns, that we all know that should be earning within 100,000, and then in your account, I see that every month I'm seeing 20 million there, then it calls for questions. So when you have a good compliance or control person that tends to have a reason for asking some of these questions, then you attach it to your own normal documents, so that when they are doing your review, the challenges that you already know that has to do with so much data, you now have reasons for this so much data, and then so much onboarding processes, you now tend to curtail all these processes so that you have minimum data that you are requesting from your customers. Thank you.
Thank you so much, Chukwuemeka. My next question, obviously, is for Inyoma, and here it goes. So we've talked about KYC, AML, and I mean, to an extent, why we should do all of those things. So what are the consequences of failing to have all of these procedures in place? What's the worst thing that can happen to a company?
I think someone has mentioned some of the things, some of the risks of not having adequate controls in place. First, I think the most expensive can be your, as a financial institution, is that you lose your license. That means you lose the very thing that enables you to play in the space. That's the gravest, I believe. And then next, fines. I think I know of a certain Nigerian bank that was fined recently in the UK. I couldn't even look at the amount. Like, the amount it was fined was substantial amounts of money. And oftentimes, when I saw that piece of news, I was thinking of what happens to the compliance team. I'm sure if you guys will be losing your job because of that fine. So you get lots of funds, because that's money that has to come from your pocket as a business. Reputational risks. So you have a case where your partners, the partners that you've onboarded, start asking you questions, start questioning your integrity, start questioning their partnership with you. Because oftentimes, depending on the quality of partners, oftentimes some partners don't want to engage with you if you have certain news about you out there. You start hearing questions from your partners, and then when you reach out to have partners outside your business, they ask you what's happening with this news, right? So that's for your internal partners and for potential partners. And then you also have the fact that I mentioned partners, and then the possibility that for your directors, and that's something that we always kind of like. Oftentimes we miss that. In regulation, there are certain liabilities that fall personally on management and directors of companies when they fail to do certain things. I think we know of a certain a particular set of individuals, these are Nigerians, who had a business in the US, and because of the nature of the transactions that they processed, they faced personal criminal liability, right, in the US, right? So those are some of the exposures that a business experiences when they fail to set up adequate controls for their businesses to prevent money laundering actions. Thank you.
Very much, Inyoma. Just quick question. The founders in the US you were mentioned, were those the guys that were sentenced to 6 months in jail each?
I'm not. I followed the news. I didn't hear of the resolution, but yes, they had criminal. There was a sentence. I'm sure they will appeal it. Or no. I'm not even sure they will appeal it. They might just decide to take up the
it could be just
time in jail.
community service, but doesn't change the fact that you could go to jail.
Yes.
For compliance.
Yes.
Yeah. Thank you so much. My next question is to you, Simi. So, what are the latest developments when it comes to KYC and AML, especially technology-wise?
So I won't say they're necessarily the latest. They're just evolving to handle. They're just evolving to handle the volume of KYC that is now required for a lot of transactions. So a lot of it circles around automation. So rather than in the olden days when, not olden days, maybe sometime in the 90s or early 2000s, where you'd have to submit paper documents and you have to constantly be the one to proactively update your record. Like I said earlier, a lot of it is now AI. There's a lot of automation of the processes. There's a lot of data gathering. So that's one development, particularly in the RegTech space. A very recent report shows that AML in particular is for the next, it was a 2020, till about 2027, AML is projected to take up about 41 to 50% of all the activity and development that there's going to be in the RegTech, the regulation technology. That's what RegTech stands for. So a lot of it is going to be based on things like using machine learning to understand transactions and particular spending patterns, spending behaviors. And so that's the biggest one. But for KYC, it still goes back to the ultimate basics. Who are we dealing with? Know your business, know your partners, know your employees, because that's a very, very niche area that people don't pay attention to. Like we said earlier, sometimes you might be involved in money laundering by no fault of yours. And this sometimes is not because there's one bad guy out there. It could be the people you hire and you trust in your organization. So knowing who you hire into your space is also helpful. And so a lot of those just involve the regular KYC things like, who is this person? What is this person all about? Basic things, who are their affiliations? And all of that is captured in the same technology that we all have come to know, like identity management and processes. So those are the developments, and that's why I'm careful to not call them new developments. It's just an evolution of the process or the processes that have existed over time, just making it a lot less stressful and paper-logged and more automated.
Thank you, Simi. Back to you, Yoma. So, given all of these things, and considering the fact that the policy, the regulatory policy, affects both big and small businesses, how do you think small businesses can use their data, relatively small data, to predict and prevent money laundering activities?
Okay, so for a lot of small businesses, I think the core is first understanding the space. There's a lot of training that needs to be done as a small business. You need to, I think that has been hinted a lot on this panel, you need to keep your ears open, your eyes wide. You need to understand what is happening in the space. You need to understand your business. You need to understand how your business can be used as a channel. You also need to understand what's out there, what is going on out there. You need to keep your ears open because, and that's essential because as a small business, you might not have access to the kind of resources that a big business will have, or the kind of resources in terms of technology, in terms of people, and in terms of cash that a big business will have. Your ability to sustain yourself will be in being flexible and being resourceful, right? Going out there, finding out, what exactly is happening. What are the boys doing these days? And that for me is a key part of how small businesses can prevent the use of their platforms for illegal money. Another part is also understanding the core essentials of anti-money laundering. I think it's very, very important for small businesses to understand the core essentials, right? Because it is from those core essentials that every other building block is built, as has already been mentioned. If you understand the core essentials of anti-money laundering processes, anti-money laundering controls, you're able to, even though you don't have the resources, implement them within your small space, because all businesses are in scale, right, at different levels, right? Even for some of us or some of us on this panel, we don't have the resources that, say, bigger banks have, right, to monitor transactions, right? But you always have to be flexible and adaptable and resourceful to understand the fundamentals of anti-money laundering and to use the resources. And because you understand the fundamentals, you're able to use the resources within your control to protect your business. Because not protecting your business exposes you to the many things I've already mentioned. Thank you.
I think the key word for me is to understand what the boys are doing these days. Thank you, Yoma. Okay, back to you, Edward. We've taken a dive into what small businesses need to do. How do you think large financial institutions, or what do you think the most effective strategies for larger financial institutions is when it comes to predicting and preventing money laundering, considering that, you know, they manage lots of transactions and it might be very easy to hide some smaller traces into that system?
Okay, thanks. So let me take it this way. Whether small or big, right? I think it's pretty much the same. Now think of you having a house. You've built a very powerful house, right? And in that house, you've stationed CCTV, right? And a criminal is trying to break into that house, and you have CCTV. The implication is that, yes, the CCTV will capture the criminal, but it doesn't prevent, it doesn't do anything. So if you look at the money laundering, what I call the money laundering ecosystem, there is detection, there is prevention, of course. At the end of the day, you might catch and you prevent, right? The truth is that the most difficult component is prevention. So most institutions today have detection, they can detect, and that doesn't make them proactive. So talking about bigger institutions that handle a lot of KYC documentations, what I would recommend is that they can embrace what I call blockchain technology. Okay, because blockchain technology brings automation, like Simi mentioned, right? So in real time, it's able to detect patterns, suspicious pattern, and also take preventive action. So you must embrace, you know, what I call automation, which blockchain technology brings into the system. Then secondly, which is very important, and people have missed out in this, is the power of collaboration. Because the truth is that when it comes to money laundering or risks or whatever it is, right, it is a shared problem. And if indeed it's a shared problem, then the resolution must be a shared responsibility. So most people are trying to deal with money laundering on their own without collaborating. So within that ecosystem, both the regulators, the players, the fintech, the government system, we must come to the table and collaborate. And by doing that, through the power of knowledge sharing, information sharing, I tell you we'll make a progress in that direction. Thank you.
Thank you so much. Okay, my final question for this round, and it's for you, Chukwuemeka. You work in a financial institution, you connect lenders to
Borrowers.
To borrowers, yeah. Okay, so how do you currently make use of artificial intelligence to ensure that your system is fail-proof, if I can use that word?
Okay, how we currently make use of artificial intelligence to make sure that our system is fail-proof. That's what we call Actimize. Actimize sort of is a platform that sort of, when a customer has a transaction that they're carrying out in their accounts, it gives online real-time reports to the compliance officer. So what it does basically is that, let's assume you've programmed it to have, to report transactions that are 1 million and above. That means for every transaction that is 1 million and above, you get the alert. Then it's now left for the compliance officer to review them. And also, you can program it in such a way that you get any report that you desire. You can program it to get, possibly when a customer has 4 transactions within a space of 5 minutes, you want to get an alert. That means all these alerts, what it typically does is that it's for the compliance officer to now review, to validate how those transactions were carried out and the legitimate, if they are legitimate or not. So we use Actimize, that's the AI platform currently used to help us navigate the growing influence of money laundering. Thank you.
Thank you very much. Don't drop the mic yet. My next question is for you. And I think it's quite simple.
Okay.
So what's the most effective, or should I say, the most cost-effective tool that you have used to control and prevent the risks of money laundering in your organization?
Okay, the most cost-effective tool that I've used, I'd say it's easy to enact policies and for people to comply. So if you are able to enact a strong AML policy and enforce compliance, to an extent, you've had a 50% coverage on preventing what's going to happen. Because this AML policy sort of details your identity check, your customer due diligence, your transaction monitoring from the onset to the list. And also, you have to optimize your KYC reviews. You know, sometimes we tend to stop our KYC reviews at the initial account holders, but there is what we call ultimate beneficiaries. So let's assume I'm a rich guy. Let's just assume that I'm a rich guy. So, and I own a company. So this company, I have 50% shareholding capacity there, and I have my other panelists there, they have possibly 10% there. And then in the opening of the account, I decide not to partake in the account opening, which means they are the signatories to the account, whereas I'm not there. Most times, what people tend to do is, initially, in the initial time, what bankers tend to do is that they just conduct KYC on the signatories of the account. Now, they've left me that is the ultimate beneficiary because I'm not the signatory, whereas I'm the person that has the highest stake on the company. So by doing that, you've left greater risk because I'm the person that every money that's coming to the account, I own 50% of it. So the most cost-effective tool that you can use to prevent all this is, first of all, to have a good policy and a good up-to-date training for all your staff, for them to understand what's at stake, for them to understand that anybody that owns 5% stake in a company, there should be a check on that person. So I believe training and having an optimized KYC is the best thing to prevent all these things.
Thank you so much. Training and retraining for your staffs and have an optimized KYC process. My next question is to you, Edward, and I hope it's not a little complicated. So how can financial institutions use blockchain technology as a way to ensure transparency?
Okay, I think I mentioned that previously, because if you look at blockchain technology, right, it comes to the system where things are being decentralized, right, and users can actually validate, okay, in real time. So adopting blockchain technology brings some level of automation, okay, because if you look at the traditional AML solutions, right, they do more of, detection. Then later on, you take action. But blockchain technology does, takes action in real time. And by doing that, we're able to actually control and be able to, prevent, money laundering. So that is one of the things that blockchain technology does for you. So having said that again, I just wanted to buttress the point he mentioned, because training can never be enough, right? We must keep training. That is one of the most powerful ways to ensure that we implement all of this effectively. Because if you have all the policies, all the tools, and people are not fully trained, there will still be loopholes. So we keep training, we keep emphasizing on awareness and education. By so doing, I believe we will make progress in that direction. Thanks.
Thank you very much. Okay, next, Inyoma. And this is a very personal question. So what's the most exciting money laundering problem you've had to deal with? By exciting, I mean complicated.
Okay, first off, Cora is a B2B platform. So I imagine that we won't have as many, we won't have, in terms of volume, we won't have the type of exposure that, say, his platform will have, because I think his platform is B2B, as B2C as B2B. The most exciting part of our process is always the UBO problem. You mentioned the UBO problem, but for B2Bs, is a bit complicated. So what happens is if someone wants to hide his ownership of an entity, there are very, very creative ways to do it. And by hiding ownership, it is, you want to set up a company, but you don't want people to know that you have control over the company. There are different ways to do it. You can either decide to use your house help, right? Your house help and your sister, right? As shareholders and directors of the company, right? That's at base level because that at base level that means that if a diligent checker looks at the shareholders on paper, they can see that, oh no, these are not the real owners. This is someone who is earning 50K per month cannot own this business, which seems to want to do $10,000 worth of transactions every month. It's not possible, right? That's basic, right? Now to make it complicated, you can decide, hey, I can set up a company and use another company to hold shareholding inside that company. Right, so you have a system where you have two levels of ownership, two levels of corporate ownership to look through as a checker. Right, you have an entity, right, and then in the shareholding of the entity, you see another corporate sitting in. Right, now where it can get interesting is that that level can go as far as 7 levels. Right, so you have a company holding a company, holding a company, holding a company across different jurisdictions. That's where it gets interesting. So you have a situation where you have this innocent-looking Nigerian entity, right, that wants on board with you. And then you find that it's owned by another Nigerian entity. And then because you are looking for the UBO, now the UBO is to be more, UBA is the person who has ultimate control, right? The reason why that's important for people in the AML space is because you want to know who exactly controls the entity, because that is the person responsible for all the transactions coming from the entity. Now, if the UBO wants to hide himself across 7 levels, what you see is that you have a corporate holding a Nigerian entity. The holding entity can be Nigerian. And then you ask, oh, who are the shareholders in this other Nigerian entity? They tell you, oh, we have 3-4 shareholders. One is a company in South Africa, one is a US company, one is a company in Seychelles. Now you have to ask questions. Now it's looking through all those levels. Sometimes you have to check to 7 levels, right? Now, let me give you a very interesting, a possible end. A possible end is that you find that you look through all this and then you find that this particular entity, this particular corporate entity must be where the UBO is because maybe it holds like 90% in the topmost 7th entity. And then you find that it's registered in a place like Seychelles. Seychelles has very interesting laws around there are countries like that that have interesting laws around revealing information around corporate holding, right? In Nigeria, for example, if you want to know the shareholders of an entity, you can check on the CAC website, right? But there are companies that actually have laws to protect people, right, from being discovered as shareholders, right? Now, imagine checking through 7 levels, and then you get to a place and they tell you, well, we can't tell you, we can't let you know because you can't verify independently because it's situated in a country that has laws that protect shareholders. Now you now have to take extra steps. Maybe you have to pay someone to do investigation, or you find innovative ways to cover your risk. That is which is where risk rating and risk management comes in, right? If you've assessed the risk and say, okay, this might be a risk that we're willing to accept, right? Maybe because you have said, oh, there are reasons why this structure is complicated, right? Other than criminal reasons, right? You might say, oh, we might accept this business, but these are the controls that we're going to have. We're going to keep checking this business to ensure that you have a high level checking, right? It's not just a normal business. Because of the risk rating, you're able to say, this is high risk. We're going to be more attentive to the nature of their transactions to be sure that they are not doing anything criminal. So those are some of the interesting things that you see on the B2B side of anti-money laundering. Thank you.
Thank you very much. Final question for you, Simi. So final question and closing statement. What are your top 3 compliance products? Top 3.
Verifies top 3 compliance products. Firstly, plug in my company. Well, I mean, we have our transaction monitoring. We have our know your know your employees, which I mentioned earlier, and then obviously our flagship identity verification. So those are the ones I really like because I like how intricate they go. And I work for Verify, so this is a subtle plug. Check us out on our social media and all our websites. So like I said, transaction monitoring, know your employees, and our flagship identity verification service.
Thank you so much, Simi. Closing statement.
A lot has been said, and I really hope that from an everyday perspective, we're more conscious about who we allow to use our accounts or our identities or our financial footprint. Because a lot of times you find out that a lot of people who are caught up in a web of money laundering never really intended to be in that scheme. So I would say ask valid questions. And if something triggers you, then maybe you should ask more questions. And if you're still not satisfied with those answers, then you probably should stop. I know it's like Edward said, it's very, very tempting to want to make money, especially in Nigeria, profits and all of that. But from a business perspective and from an individual perspective, ask those questions. Unless you are truly a greedy person, you should be asking questions. So that's my closing statement.
Thank you, Simi. Eyoma, closing statement.
As a closing snippet, I will say that the battle between compliance teams and sales teams will never end. Right? It will never end. I mean, we accept it. I think part of the burden you carry as a compliance person is to be okay with being called the bad guy, right? You have to be able to just carry that in a sense. But it's also important to be able to understand the business. As compliance persons, it's very important to understand the business, to understand fundamental risk assessments, because they are very key in the discussions that you have with sales. Because oftentimes, what the sales team needs is to understand the full scope of what is happening and the possibilities, right? Because the problem with the compliance compared to sales is that you can see what the sales team is doing, right? It's easy to measure, right? You can say, oh, sales is bringing this amount of money. But you can't actually measure what the compliance team is doing, right? Because, in fact, when the compliance team, a good compliance team, you can't measure it, because when a compliance team is doing well, nothing happens. Right? Nothing happens. If your business is going all well, nothing happens. That's a good compliance team. When you know a bad compliance team, is when you get fined, right? Millions of dollars. That's when you know that a compliance team is bad. So oftentimes the business can't figure out, especially a sales-led business, can't quantify that value that you bring. So for compliance teams, it's always about showing what the risks are per time for the questions you're asking, the steps and procedures you are setting in place, and the policies that you are pushing for from a compliance end. And for the sales team, please try to help us. Right? Those are my closing snippets.
Thank you so much, Edward.
Okay, just to borrow from what he said, imagine you being given a 2023 Prado Jeep, right? And you're asked to, zoom off to Ibadan, and that car does not have a brake. Imagine what could happen. So the compliance function is like the brake, right? They can help you, prevent potential danger. So it's important we embrace all of these things. Number two, as a way of summary, is that we need to appreciate the power of awareness and education. I've mentioned that before. In eTransat, we do that a lot. So the point of training our agents, our customers, our partners, right? Because again, this is a shared problem. And if you must combat it, let people be aware, which is where training comes into play. So with all of this, I believe we'll be on a progressive roadmap. Thank you.
Thank you so much, Chukwemeka.
So for me, I'd say that organizations need to create a culture where the duty of preventing money laundering is for the entire staff. So if your organization can build up this culture, it to a reasonable extent kills everything. Imagine a salesperson right from the onboarding stage already have the mindset that, oh, I should not bring in somebody that we cannot validate their identity. So if the culture, if it's a U-Verify culture to know that, oh, for everybody coming in, we are going to validate it. From the beginning to the end, all the staff knows. That means the organization on its own is already standing. But when we leave this duty alone for the compliance department, it tends to be like a last-minute rush. That means this customer is already in the system, and we're now trying to find a way to accommodate that person. But right from the onset, from HR, from the initial interview, we need to imbibe the culture that the duty of preventing anti-money laundering is for the entire staff, is the culture of your organization. I believe if we can do this in our different organizations, to a reasonable extent, we will kill money laundering. Thank you.
Thank you so much. A round of applause for our incredible panelists. Thank you so much. And a huge round of applause for yourselves. Thank you for joining us. We've now come to the end of our session. I would love to take questions from the audience, but sadly we do not have time. So if you do have questions, please feel free to meet them off of the stage. I'm sure they'll be very happy to oblige. Thank you. Finally, please let's have a group photograph before we step off.
All right. We can meet the speakers and just familiarize, ask our questions some more, and interact with them. What a great session, serious, so much learning.